We will learn how to find the key support and resistance levels, and I'm going to use crude oil as an example how to do that. What we will be learning today, it applies to any other markets as well. Try this newfound skill to those markets that you are already trading in, and I'm sure you'll be excited to find out easily if the supports and resistance is just around the corner. And based on our studies, we identified that the support zone for crude oil is between about 10 to 40 US dollars. And based on the current price right now, unlikely it's going to retest this 40 US dollars anytime soon. And if it's supported at 75 US dollars, the next major hurdle or resistance will be at 150. And if it ever broke above 115 US dollars, and likely the crude oil will continue to rise. And this is what we're going to do. In this tutorial, you'll find out how to find all these key support and resistance pretty easily. But before we discuss into this topic here today, please do take some time to read into the disclaimer below. Now, let me just start off with a clean sheet. All these key support resistance line, and let me just highlight them between this support zone of 10 to about 40 US dollars. And now, before I explain about this support zone of 10 to 40 US dollars, now there's two things that I would like to brief you on. The first is that when we analyze a chart, and based on the current price, we are now at about 68 US dollars. Now, when we analyze the market or the chart, we always study into its left. This is where we are now. We always study into its left. Its left, it represents the history of events, market developments, and human behavior of greed, fear, and confidence. And this confidence include insiders trading based on those events and development. So therefore, when we analyze as far back as possible in this chart, I'm saying all the way back to 1983. That's where light sweet crude first started trading in CME. So if you can get hold of the platform, just go all the way. When you analyze the market, as much data as the platform can support you, I think that'll be fantastic and that'll be great. The second point that when we analyze a chart is that we have to understand that when we analyze it, we are in fact doing a data analysis of the market. Let me just draw out the data. And this is just an example. It's not crude oil. And most of the data that we'll see, maybe the last time price, the open, high, low, close, and its volume and the last transaction. And if I'm going to give you all this data and ask you to analyze what's happening to the market, I think it'll be difficult to do that. But if I'm going to convert all this data given into a pictorial format, and what we are going to get is all the chart, all this movement, all this behavior of greed, fear, and confidence, market events, and development. So, and for that reason, it's so much easier to analyze the chart. Now, let's get started on why 10 and $40 it is currently the support zone. It's the key support. When we analyze the chart is at first we have to find all the significant trough. And I would say that this 2 point, it was a significant trough, and we just draw a straight line across. And we're going to see the reaction and reacted once, twice. And as we look at the upper zone of the support zone, we have to look at the significant peaks. And there's once, twice, and along the time zone that we could see that it broke above, but it also came down to support again at about 40 US dollars. And for that reason, I begin to understand that, hey, maybe 40 US dollars, it could be the support or resistance. And as I look back into the history, I could see that it's reacted again around the $40. There was this hammer here, and it came and it was reactive. It crossed below 40, it crossed below 10, but I would say that this was a false break. And that was in 2020. That's where pandemic started. the last pandemic that was more than 100 years ago, and that was the Spanish flu, and it caught everybody by surprise. So at a point in time, I know the support is near based on $10, and we also recognize that, of course, this is a quarterly chart, but if you go to the monthly chart, it just took a month, it break all the way down, it pushed all the way up, and I could see that this was a false break and very unusual event. And I would still say that the support is still good between about 10 to 40 US dollars and close with a real classic hammer. It closed almost on the spot at about 40 US dollars. And from there, the market formed the support zone. Now, the next objective I'm planning to do is to find the next support and resistance. Now, based on this 3-month chart or quarterly chart, and maybe what I should do is to highlight the support zone at this point in time. And I will put as 50%. Now, let me just highlight the support zone right now, or this support line. Now, again, the rules apply is that we have to find either significant peaks or trough. And we just got to experiment with it, just make some adjustment, alignment, and it got to make sense throughout history. And what I'm seeing here at uh, around 75 US dollars, about here. Yeah. And I could see that it was resisted before. There's not much resistance here, but it broke and it went and it came down and supported at 40. And somewhere around here, it got a little bit messy, wavered in and out. But ultimately, it was supported around at 75, 75, 75. And it came back down to around 40 region. And this time round, it was resisted. And you could see the relationship that this 75 became quite classic. It was wavered in and out. It was a significant resistance. It was a significant support before. And even right now, now today the date is at 23rd of June. It's going to take another 7 business day to calendar days or rather to close for the second quarter. And we're analyzing on the quarterly chart. If it close to about 75 US dollars, I'm not predicting that it will close at 75, but if the market ever close somewhere around 75 or battle that is above 75 US dollars, and now anything can happen within the next few trading days, then I became very clear that this 75, it could be supported. And my next objective, it will be at 115 US dollars. Now, just on a plain view, a straight line support and resistance is just that easy. So what we could do is that based on current price, we look back into the history as far back as possible. Where was the last support and resistance? And I'm going to highlight this here. So what we could do is that, again, do not forget to make some adjustment up and down until you find that there was a relationship between all the resistance line in this case. Yeah, and I could see that there's some false break here. It went all the way up, came back all the way down, and then there was a resistance somewhere at around 115 US dollars. It resisted once. This is considered as well false break once, twice, and there's some hairline around here. And I would say that 115 US dollars, it is a resistance to come. And if it ever break above, and I believe that the crude oil have much runway to go. Let me just go back to this 75 US dollars. I find it's really interesting here is that as we analyze into the monthly chart or quarterly chart in this case, we also have to include the fundamental development as well. Why? I still believe that the 75 US dollars, it could be supported around here. The reason could be the fundamental reason. And the recent news that we may all heard about was on the 3rd of April that OPEC Plus intend to reduce their oil production in the schedule of May, but they've been extended to July this year. With the commodities understanding here is that to understand the prices, the movement is all about supply and demand. With lesser supply, the same demand, likely the price is going to be elevated. And this was the time where they make the first announcement on the 3rd of April. You could see a gap. And this was a post that I posted a few months ago called Oil Gap, a Game Changer. And I'm going to include the link below. You can refer to my tutorial back then. So I share with you guys how to plot a downtrend line an uptrend line. So that's my expectation for crude oil. If it ever support around at about 75 US dollars, the next one would be the primary downtrend line. If it ever break above, I think the next target, it will be about 115 US dollars. And what we're looking at here is the 3-month chart. But based on these studies, go ahead to explore into other time frames. It could be a monthly, it could be a weekly or daily, into the minutes chart. It works for all these time frames. Always enjoy studying the correlation between the markets and to uncover potential opportunities. And I hope today's sharing, it will be helpful in how we invest and trade. Feel free to leave me any comments below. I love to exchange ideas with you. Really happy that you stayed through this tutorial. You have many great trading weeks ahead.